everyone, welcome to UIU Tutor. I'm Allison, and today we are going to be talking about the accounting formula and be going over some transactions along with it. The accounting formula is assets equals liabilities plus owner's equity. Assets are resources that are owned by a company, and some examples include cash, land, supplies, buildings, and equipment. Liabilities are the debts of a business or things that they owe other people. And some examples include wages payable and accounts payable. Owner's equity are the rights of the owner, and they also include expenses. So some examples include revenue, fees earned, owner's capital, and expenses. It's very important that whenever you increase assets, that you either increase liabilities or owner's equity. And the same goes if you decrease assets, you either need to decrease liabilities or owner's equity. And sometimes you will have an increase and a decrease on one side of the equation or the other. For example, if you increase cash, you may have to increase revenue. Or if you increase cash, you may have to decrease accounts receivable, which is a considered asset, which is the increase and decrease on the same side of the equation. On the screen is a problem we will be going through to show how the accounting formula can be utilized to record transactions. The first piece of information that we have is that the company received cash from the owner as an additional investment of $25,000. Now this means the account cash in the assets column will increase by $25,000, which is pretty simple to understand because your company is receiving cash, but then you also have to remember to go on the other side of the accounting formula to owner's equity and increase owner's capital by $25,000 because it is money that is being invested by the owner. The second piece of information that we have is that the company paid creditors on account $3,750. Now, being they are paying something, their cash is going to decrease by $3,750, and because they're paying them on account, that means their account payable is going to actually decrease $3,750 because they're actually paying a liability that was due before. The third transaction is that the company billed customers for delivery services on account for $22,400. An important word in this transaction is the word account. This means that you are not receiving the cash yet. It merely means that you're giving credit to the customers, which they will have to then pay back. So our first entry is under assets. Our accounts receivable will increase by $22,400 because, as I said, you have not received the cash yet. And then secondly, you will increase revenue under owner's equity by $22,400 as well. Next, the company received cash from customers on account for $11,300. This means the customers are paying back their liability to you. And this also means that you are now receiving the cash from your customers. So henceforth, you will increase cash by $11,300, and now you will decrease your accounts receivable by $11,300. This is also an example of how you can have an increase and a decrease on one side of the equation or the other because both cash and accounts receivable are both assets. Lastly, the company paid cash to the owner of the company for personal use of $6,000. This will decrease the cash by $6,000 because you're paying cash out, and it will also decrease the owner's withdrawal account that is under the owner's equity by $6,000. Thank you for checking out this video. I hope it was helpful. If you want to hear about Upper Iowa University, please check out uiu.edu. See y'all next time.